Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market, and I just want to do a quick video about a couple of news items in the articles. And uh, there's also this myth that during, a government collapse, and I think Martin Armstrong facilitates this, and during inflation, that, this time that equities will do well because they don't trust government. I mean, first of all, that's just not true. Weimar, everything quote unquote did well, but precious metals did the best, and there was huge deflation, and afterwards, and the stocks did very poorly. But the reality, and that's why I started this channel. There's not really many good analysis you can find, and that's one example. Someone who's actually quote unquote popular, but I'm going to get in the economy first, which actually shows the economy's doing poorly. I'm going to use this from a mainstream, is that Fidelity just announced layoffs, the Boston-based, and they're in this article they say it's about 700, and with difficult, decision better positions us for evolving needs. Even during times of growth, uh, we remain competitive for years to come. And it's ensuring we remain competitive for years to come. And I think that ensuring we remain competitive for years to come, I think that's a very telling sign, because right now, if you look at the mainstream media, all you hear is soft landing, Goldilocks. You hear all this stuff about the economy's doing well, the Fed, there's not even going to be a recession, or those recession fear mongering. But the reality is, if that's the case, the stock market's at all time highs, and the job numbers, which are supposed to be super strong, why would Fidelity even need layoffs to make a better decisions for the evolving needs of customers? I don't think customers want less customer service. I think they would want more access, and you would need more people to accommodate that. And so that's number one, why this, they're putting their spin on how this layoff is good, but that doesn't make it the case. And number two, if these job reports were strong, well, people would be, Fidelity has a strong 401k program. A lot of people have 401ks and Roth IRAs with Fidelity. Fidelity would actually be staffing up more, hiring more brokers to accommodate, and more money managers to accommodate all this. So that just goes also to show that the jobs numbers are farce. Because if you had a booming economy with lots of people being employed, they would be contributing to, that's more people contributing to your 401ks and Roth IRAs. So I think that Fidelity layoff really shows what the economy is really like. But getting into the debunking that whole thing is when this bond bubble burst, about how people would float. It's a dumb idea. I think it's Martin Armstrong's, that they would go to private businesses because no one would trust government. What people don't realize is that most U.S. businesses are Pseudo, I forget how to pronounce it, government entities. And I'll give you one example. How much do government contracts contribute to Amazon's web services growth? And in this article, Amazon's web services accounted for 74% of Amazon's operating income first three quarters of 2023. The AWS, the web service, has grown in its government receivables significantly. And most of this, if you look at it, a lot of it, Amazon's main exposure to government contracting is through Amazon Web Services. And a lot of this entity is funded via government contracts. They've won contracts within the multi billions, and especially from DoD. So if you look at it, even Amazon, a lot of it, a lot of their profits are from government contracts. And this Microsoft, and the other thing is when you go look at their 10Qs and 10Ks, they don't specify revenue, meaning, is this from private sector? Is it from government contracting? So there's no way to really find out through looking at their 10Qs or 10Ks because they won't disclose it. They have a little box saying, they're all subject to government contracts not being paid out, which, is true. And then you got Microsoft. Microsoft's one of the two beneficiaries of the Pentagon Cloud Computing modernizing IT, a replaced 10 billion contract. This is a replacement 10 billion contract, so billions and billions of dollars off contracting. And then there's other cloud providers like Oracle and Google. And so a lot of these companies in the US are pseudo government contractings. And not only, I have two other things. Another things. One is, if you don't believe me, then there's another thing. Forbes, richest men in America. Number one, Elon Musk. He made his sole wealth off government contracting and clean energy alone. And they're spending way more on IT. So Elon Musk, richest man in the world, got it through government contracting. So, and I was actually looking at another thing of NVIDIA. I should have done this before I owned US. But even if you look at their cash and cash equivalents of NVIDIA, about half of their cash on the balance sheet is holders of Treasury securities. So if you look at it, when this government bond bubble burst, which I think will burst later this decade, late 2020s, 28, 29, a lot of these US businesses will suffer greatly, and their top and bottom lines will really be decimated. So this bond bubble is not going to be solely punishment of government and people run to private companies. A lot of these private companies, they are going to suffer financially immensely because a lot of their top line revenue is based off government contracts. And I'm not even talking about small contracting. I'm talking about Microsoft, Google, Apple, among others. So anyway, like this video, hit that like button, subscribe if you already haven't, and I'll see you next video.